Hello, ladies and gentlemen. I'm very excited to announce our next panel. Major economic and societal changes in the last several years have forced brokerages to adapt to many new circumstances. With shifting compliance requirements, brokerages are taking on new operational challenges at multiple levels. Today, our panelists will delve into how brokerages can best prepare to succeed in the future. I welcome our moderator, Daniela Egli, Cyprus CEO and Group COO of Skilling, to introduce our speakers. Welcome, Daniela.
Thank you. Thank you, everyone. I'm Daniela Egli. Thank you, Tess. I'm the CEO of Skilling, a Scandinavian broker built entirely on Scandinavian values. And I'm here with our distinguished panelists today to discuss about how to build a successful brokerage in tomorrow's landscape. As we all remember probably that a decade ago, it was very easy to set up in one day probably and have a guaranteed success in the brokerage business. However, nowadays things are very, very different. Regulations have become more stricter. There is the advancement of technology. We have new controversial assets being discussed on the market. Our clients become more educated and want better service. So all of these items make the situation for a brokerage to be set up much more difficult in today's world. I will have our panelists introduce themselves shortly, and then we will start with our round of questions. Remonda?
Thank you very much, Daniela. I'm Remonda, the founder and CEO of Muinmos, which is a RegTech firm based out of Denmark. We've been in financial services for many, many decades. Founded the company almost a decade ago to solve the challenges we're facing with all the regulatory situations you've seen around the world, in particular focused in client onboarding. Thank you.
Hi, I'm Anya. For the last 7 years, I'm doing institutional sales and marketing for the Advanced Markets Group. Advanced Markets is a liquidity provider primed by UBS and Standard Chartered. We are offering spot FX and metals liquidity to forex brokers, funds, regional banks through margin accounts, credit setups. That's when a broker or fund has own PB, and custodial services as well.
My name is Andreas Kapsos. I'm the CEO of Match Prime Liquidity, a regulated LP. Nice to see you all. It's lovely to see everyone back, and thank you for the opportunity.
Hi, good afternoon, everyone. My name is Shawn. I'm the general manager at Fullerton Markets. We are the multi-asset broker with a very strong footprint in Asia. When we first started, we decided to stand for something different with a lot of focus on client safety and partner relationship. In my free time, I like to take photography and do cycling at a nearby park. Thank you.
Hi, my name is James Dewdney. I cover multi-asset institutional sales for Saxo Bank in London. Saxo Bank is a fintech-focused, fully integrated liquidity provider, prime broker and custodian, and I'm predominantly focused on the distribution of liquidity and market access via fixed API.
Thank you, everyone. So I will start with a question for Anya. A newly established brokerage will not only focus on the market where they are established, because usually they will establish in a jurisdiction where they need a license, but then they will want to go outside of that jurisdiction to attract their customers. So what do you think are some key aspects of successfully catering to clients from different regions?
Well, I think the key for that would be doing the homework. I think many forex brokers are failing to do so. Identifying the target, measuring the opportunity. In many cases, and some jurisdictions are not even worth expanding to if you have a certain product range or if you have a certain budget limitations. A good example is Japan. We all know that Japan is a highly saturated market for forex brokers. And yet we've seen 2 public brokers go into Japan in the last couple years. Both did their homework. One hired a local research firm that did research on what Japanese traders are looking for from the platform, and as a result of that, they redid their trading platform, and they offered it, and it went really well. And second broker bought a securities firm, so acquired a license in order to target traders. So I think the key is to do homework and be creative.
Okay, thank you very much. And what do you think about what the traders in that region request? Is there anything in particular that we need to pay attention to?
Well, it has to do, I mean, as basic as different colors compared to like European traders, I would say. Certain functionalities, certain type of access and things like that. So it can be very different compared to traders from South America, for example, or from Europe.
So thinking about what you're saying, it sounds like maybe it's not a good idea when we just start to go all out in different regions. But it's better to focus on specific regions because otherwise you'd have to do research in many different countries when you start all out. So it's best to focus, right?
Well, I mean, you can focus on different regions at the same time. It just depends on your budget. It depends on your products. It depends on your overall company structure. Mm-hmm. And how well are you planning? What are your growth strategies as well? What distribution channels are you used to use, because in some countries they work, I don't know, like in South America, you may do very well with Instagram, for example. Will you do well with Instagram in Japan? Mm-hmm. So you have to analyze it and do homework before you go into new markets.
Okay, makes sense. Andreas, I feel like you want to add something to this.
Yeah, actually, I totally concur with what Anya said. When you're penetrating a country, or a region, it's pretty important to be proactive and do your background, because every single market reacts differently. So penetrating is one thing, penetrating the right way, it's what matters, in my perspective.
Okay, thank you, Andreas. Andreas, since you joined in the conversation, I would like to ask you about technology. Nowadays, technology is everything, pretty much, and especially for an online business. At the same time, liquidity for a brokerage is very important, is at the core of its services. So how much does technology play a role in managing liquidity, and how important is technology in this context?
Both of these categories that you mentioned now are equally important. It's two of the most important components of running a brokerage at the end of the day. No one wants technology which lets them down, or liquidity. So yes, without a doubt, they are very important. I'll take technology for a start, and I would say that technology for both retail and institutional clients is extremely important. I'll take the retail for a start, and I would say that we are currently going through a phase where our traders want to be on the go. So it's really important for the trading companies to adjust to that and very fast change what they offer so they can meet the expectations of the clients. Whereas in the institutional, there are more requirements for a lot of things like the FIFO and netting and a lot of other things we can go more in detail. That you need to facilitate them to meet their expectations and their requirements. For us, being a liquidity provider, it's extremely helpful that we have partners, Match Trade Technologies, which is basically the technology arm which provides everything in terms of that. And I believe we are fortunate for this, because many times that we have a request from a broker to develop something, a feature, we don't depend on like third party to provide it, and then we can be fast in offering that. And now liquidity also, again, you need to be aligned with what the market requests from you to be able to offer it fast and the right way. Every single broker request is different. So again, you need to be able to adjust very quickly. I'm sure you guys will agree on that as well.
Shawn, I see you're agreeing with this.
Yeah, we love the ability to customize solution. So earlier we visited a booth for Match Prime. I was very impressed with the interface. It's very clean. It's very easy to understand. So I would really think that customized solution is the way to go in this market.
Yes, thank you very much.
In addition to this, you can argue as well that obviously brokers, since they want different things, sometimes you are able to provide that, and sometimes you're not. This is why this comes from a liquidity provider company. We would advise brokers to have a diversification when it comes to LPs. So that they can protect their business, obviously, since they want to build a successful brokerage. It's ideal to diversify that and have options and backup.
And that's when technology plays a very important role, because you have to aggregate, you have to manage different LPs. And
yeah, I just want to add, you want to have at least one backup technology provider as well. Even if you have your own technology built in-house, and even if you able to have your own IT department, I think you always have to have someone on your backside, or just in case, because in liquidity, if you miss, I don't know, 2 minutes of, if you have 2-minute downtime, and can cause a lot of trouble.
Correct.
So I think if you're, advanced market has like 3 backups, but I think if you represent a big company and if you work in providing liquidity, I'm sure you guys also have at least 2 backups in place to make sure the clients are, secure with everything that they will do, and everything can happen.
Correct. From liquidity, it's easier to back up, whereas technology is a bit of a more luxury. Like to have a second technology company to provide you a backup, yeah, that would be a bit of a luxury, I would say. But yeah, liquidity, 100%.
Okay, thank you very much. Remonda, since we're talking about technology, and we've mentioned regulation as well, regulation is everything as well as technology is when it comes to the brokerage business and the Forex business. How do you think technology plays a role in managing the compliance risk? How we can do that with the help of technology?
I think the answer in simple terms, enormously. There's no way this can be done without actually getting assistance through technology. And if you're not using technology for client onboarding, for example, it's virtually impossible for you to be able to do it without. Anya mentioned you need to understand your markets, for example. Where are you actually operating? And of course, with that, you also need to understand the complexity and which technologies are out there can actually facilitate this for you. So to give examples, if you're incorporating in one part of the world and you're onboarding in that same part of the world, you can definitely use local technologies out there that can actually facilitate it. But the complexity of regulation is absolutely mammoth the second you start onboarding clients from outside your core jurisdiction. Even in Europe, if you look in Europe now, of course, we have the UK with Brexit, but even we're seeing situations now, for example, with Cyprus, and we had the Dutch regulators recently, the French regulators recently, and many other regulators coming back to say, we actually disagree with how this is being done in country X and country Y, which is putting a lot of pressure locally on different jurisdictions. And at the same time as it's putting pressure, it's actually impacting potentially the free movement in the European Union, let alone when you start looking at Asia, America, Canada, and so forth and so on. So I think in simple response, you simply cannot onboard clients by just seeing it as we do our KYC AML checks, we're done. That's actually a little tiny piece of an enormous puzzle when you are onboarding clients. You have so many things to bear in mind. Can you even onboard them from that country? Can you market in that jurisdiction? What type of clients can you take on? Is it retail, institutional, and so forth? And if you can, are there restrictions? Do you need to be licensed? Can you get a passport if you're in Europe? Can you get an exemption if you're outside? Are there memorandums between the different cross-border jurisdictions where they have agreements in place that allows you to also react to equivalency, for example, regimes? The list actually goes on and is highly complicated. And the risks for not doing it well Well, you probably have seen a lot. I mean, you have obviously the breaches on the KYC AML, they're everywhere, almost daily, but the actual areas where you're onboarding clients from incorrect jurisdictions or marketing, these fines are not today in the public domain. You will not see them. These are actually done behind closed doors with the regulators, where the actual institutions, they pay a fine under NDAs, and then unfortunately they have to quickly get out or find a way to do business in those countries. Those are the things that I would say you have to bear in mind. You know, can this client be onboarded? Can you actually offer them the services and the products you want to offer them? Is it appropriate for them? Are you doing any advisory? Are you doing any portfolio management? How does that also react in the whole essence of compliance? So and just to go back to your initial question, doing that on a checklist is just impossible. It's virtually impossible. You have to lean on the technologies out there. With luck, you might find some that can actually accommodate a lot of the pieces you're looking for. But ideally, I would say before you do anything, check exactly what your requirements are. And in many institutions, we find that the teams are not consolidated. You will find some compliance that are doing one piece of the puzzle, another compliance team doing another, a legal department possibly doing a third, and possibly even a risk department. Get them to communicate together. So when you are in front of potential providers offering technology, it's very, very likely that they will need you all around the table to actually agree how to do this, instead of buying it piecemeal from different vendors or building it in-house if you have the team, and finding out that you missed 80% of the puzzle because you didn't communicate internally.
I think one of the benefits with working a strong technology partner these days is that they have the know-how of the different markets as well. So I think this would help extremely when choosing the right technology partner.
Absolutely. I mean, that's very, very important to do your due diligence when you look at the providers and actually try to establish, are they just ticking a little box for you, or do they really understand your pain points? Do they have the expertise? Do they have the cross-border also application? And can they assist you in solving your problem? You may know one piece of your problem, and hopefully if you bring in providers that understand exactly your problem and your dilemmas, they probably would steer you in the right direction to make sure you comply. Ultimately, you will be responsible, but what's very, very powerful about a lot of marketplace these days is the regulators, they accept outsourcing, but they also need you to take responsibility and find solutions that educate you to become even better compliance officers. That definitely would be my take on this.
Thank you, Remonda. Very insightful. James, we're going to go back a bit to talk about liquidity. So from your point of view for a first-time brokerage, what do you think are the main criteria that new brokerage should look at when they choose their liquidity partner?
Thanks. I think probably it's an obvious thing to say, but I think the regulatory permissions would be the first thing I'd look at. I think that you would have to be practically insane to send money or to risk your business's future on sending money and partnering with a company in an unregulated jurisdiction. I know that might be a little bit unfriendly to some of the guys in this industry, but that would be my first thing. I'd be looking at the regulatory permissions. I'd also interpret the regulatory permissions to also elucidate the broker's business model. Like, are they match principal? Are they running risk against my flow? And then underneath that, once you're comfortable with the regulatory permissions of your new partner, liquidity provider, and I use the word partner because it's the client-provider relationship now, I think is challenged. And I think it's now about partnerships, because the bigger firms actually have to decide to partner with growing, fledgling businesses, and it's really, really important that those partnerships are established, and it's an equal thing, as it sounds. And underneath the regulatory permissions and the good partnership vibes, I think I'd also be assessing the broker's technology stack. I would be looking for convoluted network arrangements as a red flag that would introduce latency, jeopardize availability. So I would scrutinize the network map. I'd try to understand all of the co-location arrangements. And if there are vendors, I'd be wanting to look into the vendors that they work with as well. So tech stack, regulatory permissions, and then I guess very obvious is the product offering. Because one of the things we do at Saxo Bank is we trade all traditional asset classes. I think the the headline is that you can trade 60,000 products via a single API integration, via a single counterparty relationship, which is quite extraordinary, covering cash equities, listed derivatives, OTC derivatives, foreign exchange spot forward, NDFs and options, and CFDs on multiple asset classes as well, allowing clients, for example, to short stocks via a CFD or a total return swap, as we say in institutional language. The reason why I think that the product offering has to be assessed is because what the client wants to do is build a track record with their partner. So if they can only get a certain small menu of index CFDs and FX spot, for example, but the client has designs on rolling out investor services in a few years' time or talking to a slightly different audience down the track, then effectively they have to establish new counterparty relationships. And they don't have, they give away some of the track record they have with their partner. And what happens, what I've seen in brokerage companies, I've worked in big brokerage firms like Citibank, I've worked in pretty small ones as well, but what I've seen is that when clients become established with their providers, they actually automatically get a very high touch service. So to answer your question, regulatory permissions, tech stack, product offering.
Thank you, James, thank you. What about costs?
Costs.
Can I add a little bit to that?
Yes.
Yeah, I think also you mentioned that it's really good to build a track record with one liquidity provider, but history and annual reports actually of retail brokers are showing that retail brokers have at least 5 liquidity providers in their portfolio, and then liquidity provider that they use just for pricing, and they usually do that with liquidity providers that offering 25,000 different products. And it's very hard for liquidity providers, I think, to be perfect at every single currency pair. So let's say some providers are really good on equities, and you as a retail broker, you want to work with this provider just on equities. Some providers are better on executing larger order sizes. Like Advanced Markets, we have a Fox price feed, which is allowing you to execute like 100, 500 lots per click on different instruments. And I know that this is like a strongest part of Advanced Markets. Some providers have a better liquidity or better offering on gold. Some liquidity providers have, connection with Goldman, and since Goldman is the only one providing spot oil, you want to work, with this liquidity provider. So to answer your question, you also have to kind of do your own research on what is the strongest part of that liquidity provider, and if it matches the market that you're going to. So if you're going to, like everybody going to Dubai now and everybody going to Middle East, so you want to look for the provider that will be competitive on gold and oil, like Brent crude oil. And if you come, and search for liquidity provider, you would ask for these questions like statistics and average spread and things like that.
Thank you, Anya. Andreas?
I totally agree with both. It all comes down to what the flow comes from, obviously, and then you do your research, you see what's the best product. But because you mentioned five liquidity providers as a number, ideally yes, but when you have someone who starts, always cost is in the way. So it's always an issue to have more because the costs go up. So becoming a successful brokerage, obviously, it comes to stages. So I would say 5 and above would be to someone that is already established rather than to a startup.
You will be surprised, actually. I had a workshop before this one. So I had a survey among like my network, and even the smallest brokerages that generate like under 2 yards have at least 3 liquidity providers in their system.
3 it's fine. Yeah.
So
good for us.
yeah.
We'll have more.
Yeah, everybody has business. Yeah,
good
that's
for
right.
us.
Yeah, maybe I would like to add from a broker point of view, right? I think both James and Anya are both right. We don't use just one LP, right? We use multiple LP for different instruments as well. But we do like to build history with this LP, okay? Keep the relationship strong. We grow together with the LP. We keep open conversation and always keep in touch in terms of requirement, in terms of market development. So that's really important from a broker, not just today, but also in the future, to have many LPs, not to spread it too thin, but to keep it close and develop relationship in the long term.
Thank you, Shawn. Remonda?
I just want to add to James's comment about the regulatory permissions, because that's an interesting one that's evolving right now. A lot of the regulators, in particular the UK FCA, has actually started withdrawing back on the permission side if you are not utilizing your license in the way that you have actually declared to the regulator. So for example, if you have permission to, as James mentioned, they check to see are they matched, are they not, can they do this, can they do that, which product can they offer, which service can they offer, and so forth and so on. The regulators are actually asking for reports on that now, which means that if you have actually applied for a regulatory license with a number of permissions in it that you're not utilizing today, in the UK today, this will disappear from your permission, which means that for James on that level, they need to do ongoing continuous monitoring of that as well. So you're not just also monitoring end clients, you're also looking also on the institutional side, is can they continue to actually operate under that model, because they probably would not know from the blue that the financial institution may have actually lost a permission. And that's really important to keep track of that, and that in our world is also part of the ongoing due diligence on institutional business as well.
Great, thank you for your input.
And the rest of the European Union will follow suit, just to add to that.
Thank you. Shawn, we will talk a bit about payments, since payments are pretty much keeping everything together running in this industry. Okay. It's something that we can't avoid not talking about. So can you give us an insight on how important it is to set up the right payment solutions and some criteria for setting up the right solutions when you just start?
Okay, first of all, a quick shout out to all the payment vendors out there. You guys are really the key vendors to brokerage business like us, because we need you guys to be the gateway, right, to the end clients. What I would say is that before you onboard any payment providers, you need to understand your end client, right? The local practices and local needs. For example, in Asia itself, our markets stretch from Thailand, Malaysia, Vietnam, Indonesia, Philippines, right? So in each country, the really key thing is to understand local practices. For example, in Vietnam, they like to do direct local bank transfer. In Thailand, they prefer to use QR code, and in the Philippines, they prefer traditional methods like ATM, right? So understand your client base is the first step in selecting the payment processor, right? And the second one would be get the payment provider that you trust. By trust, I mean have open conversation, okay, what you can do, what you cannot do, right? So that we find the right fit in the integration in both parties. And lastly, I believe in having backup, right? Like Anya has said, I would love to have many backups of providers in order to reduce any latency or improve the approval rate of any transaction for my end client. So I would say this, in summary, these are the three factors in selecting the payment providers of today and tomorrow.
Great, thank you very much, Shawn.
Can I ask him a question?
Yeah.
How many payment solutions do you have? Like, I mean, you quite a larger forex broker, so how many payment solutions do you have? Okay,
to be honest, we are having at this moment more than 25 payment provider in Fullerton Markets. Like say, one of the reasons is to attack the local country, understand the local needs and requirement, and also having backup. So that's why it's like 20 over providers.
So payment providers on this expo have a chance.
Yeah, I met a lot of them today. Thanks so much for the expo as well.
So, Shawn, speaking about onboarding providers, we looked at this point of view from the point of view of clients. Who are the clients in order to meet their needs, in order to be able to deposit? But when you onboard the payment provider, you also have to think about your own setup. Is that correct? Can you tell us a bit about that? Because payment providers are quite picky sometimes, looking at your jurisdiction where you are set up. So can you give some light into that?
Yes, actually, you are totally right. I first mentioned about trust. So the first thing I mentioned about to the providers are my setup, right? Where my client base are, what is the company infrastructure, what's the company incorporation. All these factors, I actually mentioned it at the very first conversation, right? So we start off at the right footing. Whether or not we decide to grow together, this is one of the things I will mention at the very start. We want to start the relationship right at the beginning, and also, of course, to manage all the different providers is basically we need to maintain liquidity with them, right? There should be sufficient funds in all these payment provider in order to facilitate deposit and withdrawal smoothly and timely. Right, so that's a two factor in summary, I would say, are necessary to start and maintain relationship with payment providers.
Great input, Shawn. Thank you very much. Anya, competition is fierce in our industry, right? We have so many players, and it feels like there's no room for differentiation, or is there? What are some of the ways that the brokerage can attract traders and make them stay with their platform instead of choosing another broker's platform? And is that different for retail clients versus institutional clients?
Well, first, I think that right now is the most exciting time for anyone that is in marketing or sales, because there's so many distribution channels for marketing. You can reach any client, is it retail client or institutional client, you can reach them. Because there's more and more people are joining the internet, they're browsing internet. They're on also social media channels. They are more likely to attend the virtual expo. They are more likely to go into Zoom webinars. So I think they're just not just a matter of how you attract them, but a matter whom do you want to attract. And the challenge is mostly picking the distribution channel right now. That's what I feel like. And then as per, the most successful way of targeting, I think for retail right now, it's definitely digital marketing and everything that has to do with it, educational, any type of educational marketing, again, has to do with their influx of new investors and new traders to the market. And I also think the second one is going to be a local-oriented marketing, particularly for startup brokers or smaller brokers. Because they work with IBs and IBs are more comfortable working with them, and that means more local approach.
And in terms of retention, because once we acquire the client, we use all these channels, we get the client in, and what keeps them on our platform? What can we do differently?
Well, average, when I check the public brokers report, right, it's about 30 to actually 45% of the clients that they have stayed with them more than 3 years. I think representative of a brokerage will be able to better answer the question, what are you doing to keep them with you? But what I've seen, it's of course continuing education, a personal approach to every client. I know that retail brokers are assigning account managers to accounts over a certain threshold. They do third-party programs and third-party tools. A lot of now it's very popular, artificial intelligence, which makes decision when to contact the client when he made X amount of transaction. I think C pattern and outer charges good guys to answer this question as well. But I think since you're running a brokerage, you're the perfect person for that question.
Okay. I'll continue with your thoughts. I think one of the best way to keep a client is to be proactive, right? So more often than not, when I look at the experience that in the past few years, I would really appreciate a call from the LP when they have new products. Instead of me asking them, oh, do you have this product? You might come to me this month and say, oh, we have 3 products, 3 asset class coming up. Are you guys interested? If I have that conversation, business will move so much faster. Instead of me requiring some new products from the LP, right? So that is proactive engagement. And of course, we also believe in a win-win approach to both LP and the broker. So that is an ongoing conversation that is very necessary. But I believe a proactive approach will be necessary.
Yes, Remonda, please.
I just want to add, we're talking about keeping the clients. Maybe we should talk about getting the clients through the door in the first place, because that's one area we feel that a lot of investors, when we talk to them, even institutional investors, they're absolutely frustrated with the whole journey of how they're taken on. And a lot of them, you know, even if you're dealing with some cross-border and higher risk jurisdictions, you shouldn't really treat clients as criminals before they make it through the door. And that's actually a very, very bad feeling to give a client when they are getting through, where the journey should be really pleasant for them. It should be, again, back to technology. You can do a lot using technology without having to ask for all sorts of random crazy paper that a lot of institutions, they're piling and putting somewhere in a safe box, which one day when they need it, they probably can't find it. It's actually a really, really big problem when you're onboarding clients. You really need to find better ways of making the journey good for them. And even regulators today, we talk to a lot and try to actually convince them that this old-fashioned way of doing things has to stop. And a lot of players in the market, you shouldn't be afraid of questioning authorities. You shouldn't be afraid of questioning the regulators if you feel something can be done differently. And we definitely try to do a lot of that because we have moved on, and soon we'll be talking about the metaverse as well.
Thank you, Remonda. And indeed, onboarding the client is very, very important. And I mean, that's where you can lose a lot of the clients if you push them away with convoluted processes. Andreas, going back to products, because we mentioned how important new products are for our clients in order to retain them. Obviously, cryptos are the latest rave right now. How important is it for a new brokerage to offer this very controversial asset to their clients, and why not?
Well, undoubtedly, it's the new thing. You know, everyone talks about it, and it's directly correlated with what Shawn said. Obviously, it's very important, and it's the #1 marketing that everyone is using right now. However, brokers need to be vigilant with it as well, since it's so dynamic and you have so much volatility going on with it. You always need to be prepared about it. And this is something that we always discuss it with the brokers. Adding something like this, on one hand, is a very good upgrade and innovation and improving your product, but at the same time, you need to be able to control the risk with it, that creates it, and be proactive about it.
And also, I guess brokers would have to really be mindful of the regulation or the jurisdiction where they are licensed in, because cryptos are not really accepted by all regulators, correct? I know that that's a bit of a feeling in Cyprus as well. So have you seen that?
Of course.
Your clients struggling with this part of offering cryptos to their clients?
Well, yeah, they do on some occasions, as you mentioned, geographically, depends. But what we have is there's so many requests from brokers that come in, which you need to assess as an LP on your side as well. I mean, at the end of the day, yeah, we want to do retention, we want to provide, we want to improve, but at the same time, you need to be able to pick what is for the long term rather than on the short term. I'm sure other LPs will be able to express their opinion about it as well.
Okay. James?
Okay.
Shawn, do you want to add?
Yeah, okay. Now, James, go first.
Thanks. I mean, we trade cryptos. We offer the 5 largest coins by market capitalization against G4 currencies. I'm personally crypto agnostic. I understand the value. I can see very clearly the value of distributed ledger technology, but I have issues with the concept of intrinsic value in crypto. I think the intrinsic value is like beauty is in the eye of the beholder, and I think that the value of crypto is in the eye of the participants, or in the mind of the participants that hold it. I think that we're going to see big changes, big shake-ups. I think that as it stands now, there's small number of people, I think we all know who we're talking about, he's into electric cars, but they have far too much influence on price action in the market, and I think that's challenging. And I think for traditional brokerage companies, it's challenging because we kind of work on a 2200 hours on Friday, things power down, and 2200 on Sunday, London hours, they start up again. And a lot of work goes in on networks, and the infrastructure goes in on the weekends. And I think if you're serious about crypto, you've got to be doing it 7 days a week, because if your client is serious about it and they get hung out to dry because something happened, Musk is tweeting on a Saturday afternoon, that's a problem. So I think that the brokers that want to do it have to really be in it, because they have to then become a 7 days a week broker.
We've reached a point where at the moment we're currently offering like 50 symbols on crypto, and you don't know where this is going to end. We're happy to do that, but at the same time we want to keep monitoring the situation as well.
Yeah, no, it makes sense. I mean, especially now we've had a big crash in the market.
Exactly.
And, yeah.
How are you managing risk on so many instruments?
That's a good question. At the moment, we currently separated a team where it specifically concentrates on the risk and the flow that comes in. This is something that it was a must for us. Otherwise, if things get out of hand, obviously. This team evaluates the flow that comes in, and we handle it accordingly.
Do you think it's enough liquidity for crypto right now?
Sorry, go again?
Do you think it's enough liquidity for crypto now? Because everybody talks about it, but...
Enough liquidity?
To hedge, for example, if you're a
No.
forex broker?
No, I believe not. There is room for improvement in the market, for sure.
So liquidity providers are not taking enough risk on crypto, in a way?
Taking risk in crypto.
Like being more aggressive on offering different crypto products, or just overall, it's not enough liquidity providers offering liquidity on crypto right now?
The major cryptos, I think, are being covered. However, the new ones that come in, because it's unknown, people will be a bit hesitant to touch, and that's where successful companies come in. If you do something first, then you are the innovator, so you have an advantage on it. It goes with all the assets, but obviously crypto, which is something which comes very quickly and you need to adjust very quickly, that gives you a competitive edge on 100%.
Thank you, Andreas. Thank you, Anya. Shawn, for the last question of this panel, I want to ask you about the difference between starting up a brokerage and scaling up a brokerage. What are the differences between these two stages of growth of the company, and what's important for a new founder to focus on when they are in each of these stages of their business?
All right, thanks for the question. This question is somewhat very close to my heart, because as a GM now, but I was in the founding team for Fullerton Markets about 5-6 years ago. So starting up and scaling up, I think there was something that is bring back my memory, right? So for starting up, I believe besides the usual factor, you need to have capital and outlay and your funding. I believe the two most important factor will be commitment and grit, right? Because when you start out something, it is basically requiring a lot of commitment from the team, the pioneering team, the pool of talents that you bring on board is very important, and also to share the common vision. When you start out something, it is absolutely critical to have a common goal in mind, right? And in terms of operation, I believe when you start out, you tend to rely on vendors, right, to help you, to assist you to kickstart the business, right? And you want to go to the market as soon as possible to bring in revenue. So that is the starting out phase, right? Startup phase. As you continue to grow, I believe you need two other important factors to grow. You would need innovation and you will need marketing. Product innovation is important to not only keep your clients engaged and come back and use your services, but also product innovation is something that proprietary to your company, right? That is something you need to keep and develop. And lastly, in terms of marketing, as you grow and scale up, the world is your oyster, right? You need to have a strong marketing campaign and vision to engage the broader world audience so that you can continue to grow and dominate whatever market that you choose. So in summary, I believe in both phases, managing and measuring growth is important, and because you can't manage what you can't measure. So I believe that is a common factor in both phases of a brokerage.
Thank you very much, Shawn. Remonda?
Well, I've been in two major startups. One was Saxo Bank and the other one is CFH Finalto. And I think my take on this is believe it's going to happen. Because if you believe it's going to happen, you will build the infrastructure in readiness for each phase of the journey. Because both these two major startups, actually, we, at least in those early days, we all believed it was going to happen. Every single person in the organization believed we were going to really make a breakthrough and become global institutions. And actually we did. And I think we built the business not for today, we built it for tomorrow. And that worked amazing in at least the companies where I was and at least where I am now. So.
Great. So it's important to have a vision that the whole team shares in order to move forward. Thank you very much. Thank you, everyone, for your insightful thoughts on our topics today. To conclude our panel discussion, we have touched on onboarding, on payments, liquidity, technology, marketing, client acquisition. And I think that we can say that we have to be very intentional with what we want to achieve when we start a brokerage nowadays. We can't just start it off and hope for the best. We have to be very intentional. We have to do our research. We have to use the right technology partners and the right liquidity partners. And we have to be close to our clients in order to retain them. Thank you very much.
Thank you.
Thank you, everyone.
Thanks a lot.
Good job.